Good evening, all. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. Today is Sunday. This is a tough time in the market in some aspects. You have to do things right at this point because it is not the normal market conditions. This is a chart of S&P 500. What I want to show you are the last few days. And you can see the bump on the left side of the candle is the open, and the one on the right is the close. And you can see that this one opened and then took a dive. The next one opened, went down, went up. Next day, gapped up, closed up. Next day, gapped down, went straight down. The next day, gapped up, went up. The next day, gapped up, went all the way down and all the way back up. The next day, gapped down, went all the way down and all the way back up. This is an absolute mess when it comes to the candles themselves, the days themselves. And this basically represents the last week. Here's the last 5 days. And you can see that, last Friday and last Thursday were also very, very strange. Lots of volatility, lots of movement in the index itself. In other words, you cannot trust the index right now to do your trades on. Or you can trust it and just sit on the sidelines because the index itself is just not working correctly. That's S&P 500. If you look at the Dow Jones Industrial Average, it looks about the same. You also have these huge, humongous candles that go either way. The problem with candles that go both ways, one day they're up, one day they're down, is that if you're long, you're going to get stopped out when you have a gap down. If you're short, you're going to get stopped out when the stock market gaps up. So very tough for swing trading. If you look at the index itself, that index really took a dive, and of course now it's very, very choppy, very, very much sideways. Our whole strategy over the last week has been very much on the defensive side. We have not been very active because of this reason, because we do not want to trade the mess. So why do we have a mess right now? Well, one of the reasons why we have a mess right now because our financial markets are in a mess. Lehman Brothers are probably going to declare bankruptcy sometime tonight as I'm speaking. It could be any moment. Merrill Lynch looks like he's going to be taken over. AIG, American International Group, may be taken over or may need some serious sale of assets. Not a good thing. I'm not sure how they're going to fix the problem. I think they have to fix the problem. I don't think they have a choice. I don't know who's going to fix the problem, how. But it's definitely something that the market is worried about. The other thing that the market is worried about is gas prices right now because of the hurricane. And also we have FOMC meeting. We have FOMC policy statement due out on Wednesday. And, that could shake up the market as well. Not the best time to hold on to trades at this point. You do not want to be a long-term investor when the market is doing all of that. As of right now, the futures are down 36 points. The NASDAQ futures are down 40 points. So we're expecting quite a sizable gap tomorrow morning. I do not suggest that you enter any new trades tomorrow, especially not on a large gap down like this. I also suggest that you wait till probably Wednesday to really look at what the Feds are going to do in order to not accept too much risk by entering before interest rates come out. I highly doubt they're going to raise rates right now. It would be impossible for them to raise rates right now, especially when our financial market is in trouble as it is right now. Interesting part about this is S&P 500, and we can see the XLF, which is basically the index, the S&P Select Financial Spider. And you can see over here, it's not really taking a dive. It's not really going anywhere. But if you look at Lehman Brothers, for example, straight down. If you look at WAMU, Washington Mutual, straight down. If you look at Wachovia, also quite a sizable dive. But the big one is Lehman Brothers. Now, the reason why this is not reflected in the index, and this is something that indexes are famous for, they don't really represent much, is because the top holding for the index is Bank of America. And Bank of America has come back up. Bank of America represents 9.18% of the XLF. JP Morgan represents 8.5% of the index, and you can see that JP Morgan is going up. Wells Fargo also represents 6.76% of the index, and you can see that these specific financial stocks are going up. Does not represent Lehman. Lehman actually is 0.15% of the index. Merrill Lynch is 1.56% of the index. AIG, stock that's been absolutely taking a beating, you can see that it went from the $65 level all the way down to 12, is 1.95% of the index. Yes, they've gone down, but if you look at the index weight and why the index itself is not reflecting this problem, that's the reason why. They represent a very, very small percentage of the index itself. By the way, if you want to know more about the index, you can go to the sectorspider.com and look up XLF, and you can see the holdings that the index has. But that's the reason why it's not really reflecting. We've had a very good month last month. It turned out to be quite all right. And the reason why is because we had consistent small profits that worked out very, very well for us. And that is absolutely the key right now, is to know when to hold them, know when to fold them, and make sure that you're trading the right stocks with the right type of pops. I'll give you a few examples of the type of trades that are working for us right now. CATY, for example, and we're able to take this pop. We're buying over here and able to take this pop right there. We had... I'm going to show you the nice ones, of course. ACAM, the stock penetrated support and really, really fell apart. That worked out very well for us. Titanium metals, when we traded the commodities, and that worked out pretty well for us as well. Let me see what else I want to talk about. China Dex, that stock worked out for us very well on the short side. We had BPOP that worked very well for us on the upside right here. So, and we've had quite a few more, and you can look them up on our website under performance, and you can see all the stocks that really worked well for us. This is when we took a position on the whole airline sector when gas prices were coming down, and we did very well on this stock. Went all the way from 9 all the way up to 16 or so, 15. The bottom line is whatever the market is, there's sector rotation. There's a sector rotation inside the indexes themselves. Even the XLF, the financial index, has different sectors in it that all move differently. But the market itself also has different sectors on it. And that's what you need to be able to do right now. Don't look at the indexes themselves. Don't look at the stock market itself. Don't look at the S&P 500. There are stocks that are moving either way, on the long side and on the short side, as the market is trying to find direction. This is a tough time in the market. You have to be able to pick the right sectors, pick the right rotation, pick the right trades, pop them, and make sure that you have consistent small profits, which are much, much better right now. You can't go for the longer term, large profits. You have to look for the small, consistent, everyday type of profits, which is, of course, what we specialize in. So we're doing pretty well right now. Anyway, have a great week. I hope you were not affected too much by the hurricane. Look forward to lots of news this week. If you have any problems or any comments, email us, support@shoguntrading.com. Have a great night. I'll talk to you next week. Take care.